What's going on, guys? Zach from iTrendz here, coming to you guys live with a trade recap. Instead of a banger, I'm actually bringing to you guys what you shouldn't do. We're going to talk about a trade that I took that was just a poor trade, really mishandled. I went long in, or I went short in demand. Not what you want to do when you're in a intermittent rally, even in a bear trend. It's clear. Let's start with QQQ. Actually, let's just get right into it. I don't need to do a whole spiel. So we can take away this alert here. So let's take a look, right? So today is the 22nd, I believe, the 22nd of July. So since the 14th, really, well, this is the 5th, excuse me. Since the 5th, we had a nice bounce off this trend line that we had made over here, right? So we had a nice bounce off this trend line, demand zone over here, nice bounce, came up, double tapped this 296, pulled back, hit the trend line and bounced again. So overall, what I'm trying to depict here is that this is a low, this is a higher low, this is a higher low here. And although we didn't make higher highs here or higher highs above this yet, we're still making higher lows. So we have to be aware of that in this bear market that we're in now, we're in this little bit of an uptrend here. And so you don't want to fully ignore the uptrend because there's lots of buying opportunities in these uptrends. As far as intraday, you can take nice percentages off of upside calls, especially if you're buying in demand. So I realized it's just a little too late. And even after I realized that, I still made this stupid mistake with AMD. Happens to everybody. And I think that this is just going to be good for educational purposes to show why I made a mistake. So today, as you can see, we're having a big reversal candle here. Very nice to see. However, we're going to be taking a look at yesterday because it was yesterday's trade where I messed up. So let's just zoom out to a 20 arrow 1 hour here. Excuse me, my program is lagging a little bit. Let me get rid of Discord here. Sorry, I just don't want it to lag for you guys. So as you can see, we're making higher low, higher low, higher low, higher low, higher low. And then today it's another higher low. However, this is a lot of selling action and selling pressure that we're experiencing here. But one thing I want to point out is that we've got higher lows. So in this trend right here, your risk to reward is much greater buying the longs at demand rather than going short at demand. One, like I did, which was I messed up. Or two, trying to look for the reversals, like just trade with the trend rather than trading against the grain. It's going to be a lot easier. Now, if you're trading longer out contracts and you've got your remaining bearish on the economy, and you've got September, you've got December, you've got January puts, this is different. If you're picking them up on every pop, then that's a way different ballgame. We're talking about intraday trades here, where your risk to reward ratio over the past week and over the past 2 weeks has been skewed to where if you're buying calls off demand, your profitability or your probability, excuse me, is much higher than if you're just waiting to sell in supply. Yes, it worked for a 4-day string right here, but that was just a pullback in the overall shorter time frame trend, in the longer time frame trend of this bear market rally that we've got going on here. So we're going to be focusing on yesterday. So this is yesterday's price action. So yesterday we had a demand zone sitting right here. So I'm going to mark this up for you guys so we can check it on the 5-minute. So we had a demand zone sitting right here where you can see that we had made a high, we had made a high over here previously where we then created resistance, pulled back, bounced off of another demand zone, which was right over here. You can see, bounced off our demand zone over here, pushed right back above our previous high, pushed above it, used it as support one time, then traded sideways. And in yesterday at open, we pushed up and fell down to this level. Some great trades on QQQ that I had, but then I really just got ahead of myself and tried to take this AMD at demand. Right here, I tried to go long, or I tried to go short, excuse me, and take it back down to this next level of demand around this 300 zone, but I got chopped up. And so I want to review that trade. Let's take a look on the 5-minute here just briefly. So as you can see, nice trade up. And then our trade down, heavy sells, harsh bounce, heavy sell back down in demand. And then it was nothing but buying from there up, right? So let's take note of that on QQQ. Let's go over to AMD. Go over to AMD. So as we can see, same exact trade here. Let's go out to the 1 hour here to show you guys 20-day 1 hour. So you can see right here, we have a small demand zone all the way on the left. It was big resistance over here. We had an impulsive move above, and then now we had ourselves sitting on it. We actually broke that today, made a lower low off this most recent low that I took the shorts on yesterday. So we're actually lower than that now, which is a good sign. If we push, or if we pull back, excuse me, rather, all the way to 89, I might even consider swinging AMD puts over the weekend. I know it's kind of crazy into FOMC week next week, but this is a pretty big minor break of structure here. Our major break of structure isn't really, your change of character is down here at $80. Your major break of structure is down here at 85.75. Excuse me. So that would be the price target of the shorts if we can manage to get back up to this 89 level. But let's focus on today, or yesterday rather, excuse me. So if we zoom in here, we impulse move up, made our resistance support, used as support here, bounce, bounce. We came down, shorted down into it, and then using this demand level in this uptrend, you should be looking for longs here. If it holds this level, your risk to reward ratio is far greater here, taking longs in demand up to your next level, up to 90, this 92 zone that I have drawn here, rather than trying to short it, because we're in this uptrend and every demand zone is being bought up. And now on top of this, you have a catalyst. That catalyst is the chip bill that they're trying to push through. And Nancy Pelosi is buying NVIDIA like nobody's sister, and or whatever. And so you have to really keep this all in the realm of like your intraday trades, because I realized this a little too late in this specific rally, where I should have been buying at demand. That would have made my life a lot easier. It still was profitable, still made great trades, but I would have had to do less searching for a trade if I had just had confidence in the fact that what I was looking at, which was demand zones are being bought in this rally, and now we're potentially seeing a sentiment shift. So anyway, so I went short in this demand zone. It was very dumb. And as soon as we got out of the demand zone and came above this 89, I should have been out of the trade. I should have been out. And I even said it, and I'll show you here. I said, I'm looking for us to stay below 89. If we go below 89, I will be out of the trade. You can see here. I don't know if you can see. You can see that I said entering AMD short, and then a couple messages later, I said I should have took the stop loss. I'm getting murked on these AMDs. So even if I didn't know where these zones were off the demand zone, even if I had taken this short here and didn't know where my top side levels were, where my take profits were, or where my oh shit levels were, where I should have gotten out of the trade and taken a stop loss, being short at demand here, well, otherwise it's been strong uptrend where you should have been buying long in demand. I should have respected my VWAP. So let's turn VWAP on here. VWAP. I'm just opening it up here. All right, that should be good. I don't want it to give me the bands though. Hold on one moment. Hold on. I really don't know why my computer's been lagging with Zoom recently, so I'm very sorry. All right, so you can see VWAP came on. So VWAP, if you don't know already, is an indicator that I use as a stop loss indicator. It's not so much as an indication of where the price is going, although I do utilize it in that fashion. It's more so of if I make a poor entry, where my stop loss is, or if I made a mistake on my exit, didn't exit because I got too greedy, if I should be exiting my position. The link to that video is down below. But as you can see here, taking short in demand, dumb already down bad here. As soon as it crossed over VWAP, that's telling us, right, if the VWAP, generally speaking, a stock above VWAP is strong, a stock below VWAP is weak. So what happened? The stock was below VWAP trending into demand. I went short at demand, big mistake, and then ignored the fact that the stock was then back above VWAP, showing that, okay, the stock back above VWAP, generally speaking, is strong, and it could reverse its trend here. So with that being said, I should have sold this when it went across the VWAP, when it crossed the VWAP here, but I didn't. I ignored my own rule. When you ignore your rules, you get burned. What happened? I ignored my rules and I got burned. Luckily, I had a great trade on QQQ, an amazing trade on QQQ, and I went really heavy on it. So it didn't eat up too much of my profits on the day, but this is a good example of what not to do. You're ignoring the trend from the very get-go, right? If the trend is buying long at demand, right, over the course of the last 7 days, if it's buying long at demand and you're shorting at demand, then you have a significant issue. I didn't even wait for a retest, a break and retest of demand to go short. I just went short at demand. And we were profitable on the trade for a second, but then it went against us. And so I was wrong from the get-go. I should have recognized that I had a poor entry and adhered to my VWAP rule, which is that if I have a poor entry, I use VWAP as a stop loss because that could show that the stock is trying to reverse from there. In this environment, I was going against the grain wholeheartedly. And I had nothing going for me. It was a very, very bad trade, very poor decision. Ultimately, you can't hold those against you, though. The biggest thing is that I took this L with pride. I embraced the fact that I failed and I took this really poor trade because that will happen. You're not going to be a 100% trader. You're not going to be a 10 out of 10 trader. It's okay if I'm an 8 out of 10 trader with 2 losses, that I manage my risk appropriately. Those losses will be small and my gains will be large. And maybe even if my gains weren't large, they're consistent. Over 80% trades, if 80% of my trades are green and the wins they outnumber the losses in terms of dollar value, then you'll be okay on the trade. So I embraced the fact that I failed on this and I came back with retaliation today and actually smacked AMD on the downside here, took it once we break 89.22, put it in the free alerts even, and it was a super banger, 70%. A couple members made good 70% gains off of that, smacked it. And then since yesterday I messed up, what happened? There's a little extra here. What happened? I actually took a NVIDIA Lotto off the first touch of this demand because yesterday I went short at demand. Today I noticed that NVIDIA had fallen into demand and we were at support on QQQ. So we were at our first support level on QQQ. This is NASDAQ in the bottom left here, QQQ, same exact thing. We were at support and we were at demand at the same exact time in NVIDIA and QQQ. There's my confluence right there. What's going on? We're in an uptrend. We should be going long. We should be a little careful, but we should be going long at demand now that we've been in this uptrend for a period of days. Or period of time rather. So I took the trade all the way up here and went from 19 cents to 36 cents exit. It was a great trade. It was a very simple trade. It was a simple way to make 120%. All you had to do was buy 10 contracts and you made 160 bucks or, well, actually closer to 200 bucks. But anyway, with that being said, you just need to learn from your mistakes. So rather than pitting myself and saying, oh man, I messed up. Why the hell did I do that? How am I making these mistakes? I looked at it, analyzed it with a positive outlook and said, the next time that I get tested with this in the same exact opportunity, I'm going to take advantage of it. And what did I do the exact next day? I did the exact same thing, but I executed properly and I took longs off demand and I ultimately profited off of it. So with that being said, guys, it's just really important to remember that everybody's human. You're not going to be a 100% trader. There's no shot. Even bots aren't 100%. So good luck trying to be a 100% trader. It's just not going to happen unless you have unlimited funds. With that being said, make sure not to pity yourself or get down on yourself when you are, maybe you get a string of bad trades. Take a break. Take a step back from the market. Watch the market move for a day or two, and then get back into trading. There's no reason to rush trades. We've got a lot of time on the earth, and the market is always going to be here, and there's always going to be setups in the market. Sometimes you miss a golden setup, and it's like crap, but most times within 7 days, you're going to see the exact same setup on the opposite side to trade, and you're going to be able to take advantage of it if you're in the right mindset, the right positive mindset, rather than always being down on yourself, always being hard on yourself because you missed the opportunity. So anyway, with that being said, this is Zach from iTrendz. Peace out. Hope you guys got a lot of knowledge from this, from my mistake on this, and I'll be doing a recap on a positive trade here in the future.